Most people never invest. They keep their money in savings accounts earning pointe interest, while inflation eats away at their purchasing power every single year. Meanwhile, the stock market has historically returned about 10% annually over the long term. That's the difference between $10,000 growing to just $10,000 in a savings account versus $27,000 in 20 years through market investments. Today, I'm showing you exactly how to start and why waiting another month could cost you thousands. Let's talk about what the stock market actually is, because I think that's where the confusion starts. The stock market is simply a marketplace where you buy ownership pieces, called shares, of companies that are publicly traded. When you own a share of Apple, Microsoft, or Tesla, you literally own a tiny fraction of that company. As the company makes profit and grows, your share typically becomes more valuable. It's not magic. It's not gambling. It's capitalism in its purest form. You give a company your money, they use it to grow their business, and you benefit from that growth. Now, there are three main ways beginners can invest, and honestly, one of them is probably right for you. First, there's individual stock picking, buying shares of specific companies you believe in. This requires research and attention, but it's absolutely doable for beginners. Second, there are exchange-traded funds, or ETFs, which are basically bundles of 50, 100, or even 100 stocks, all wrapped into one investment. This is my recommendation for most beginners because you get instant diversification. Your money is spread across many companies, so one bad performer won't tank your investment. Third, there are mutual funds, which are similar to ETFs, but typically have higher fees. For beginners, I'd skip mutual funds and focus on ETFs. Here's exactly how to get started in the next 15 minutes. Step 1. Choose a brokerage. Companies like Fidelity, Vanguard, or Charles Schwab let you open an account completely free, with zero minimums. No, you don't need $10,000 to start. Many let you invest as little as $1. Step 2. Fund your account. Link your bank account and transfer whatever you can. Even $500 is a fantastic beginning. Step 3. Pick your first investment. If you're overwhelmed by choices, start with a total market ETF like VOO or VTI. These track the entire US stock market, so you're betting on American business broadly. Step 4. Set it and forget it. Don't check your balance every single day. That's how people panic sell during dips and lock in losses. Let me show you the math so you understand why starting now versus waiting actually matters. If you invest $2,000 today in a diversified portfolio and get that historical 10% annual return, in 10 years, you'd have roughly $590. In 20 years, $13,000. In 30 years, $34,000. That's from a single $2,000 investment. But here's the thing. Compound interest is powerful only if you give it time. If you wait 5 years and invest that same $2,000, you're now looking at $20,000 less in 30 years. Time in the market beats timing the market every single time. The number one mistake I see beginners make: chasing trends and trying to beat the market. They see someone on TikTok made money on cryptocurrency or some hot stock and panic they're missing out, so they dump money into something they don't understand. Then it crashes. Then they swear off investing forever. The truth is boring. Pick a solid, diversified investment. Contribute regularly, even just $100 a month, and leave it alone for years. Your 25-year-old self who invested $200 a month will be a millionaire by 50. Your 35-year-old self who waits to get started? Much harder road. This isn't financial advice. You should always research and consider your personal situation. But the math doesn't lie. Before you go, here's what I want you to do right now. First, if you have zero investments, pick a brokerage and open an account today. Takes 15 minutes. Second, start with just $500 or $1,000 if that's what you have. You're not trying to get rich overnight. You're trying to build wealth systematically. Third, commit to adding to your investment monthly. Even a hunt counts. Your future self will thank you. And please like this video and subscribe for more real personal finance fundamentals that actually build wealth. No get-rich-quick schemes here, just honest money education.